Good evening, everyone. This is James coming to you from Dividend Stock Talk. Today is Monday, September 25th. It is 8 p.m. We're going to be a little early tonight doing our show because I'm trying to get away from that scenario I got going on. We're looking at Dividend Stock Talk, where we invest exclusively in dividend stocks, specifically for monthly and weekly cash flow. Now, for the whole year, we've been averaging around a little over 1% per week, which is a good thing, right around 1%. And that's what we're trying to strive here at this, questions and answer thing. We give you a little bit of tips here and there. I show you some of the trades that I'm going to make and whatnot and go from there. All that being said, let's jump on in and see what's happening this week. This week, I believe, we did a... what's the exact terminology for it? Covered call. A covered call on BMY. Okay, so let's pull up BMY and see what that says. And that's Bristol Myers Squibb, in case you guys didn't know. Okay, so Bristol Myers Squibb starts out the year right around the $50 area, and it trades there for about 2 weeks. Jumps on up to a trading range of 60 to 69, and it trades there for about 6 months or so. It finds a high of around 77, quickly drops down to trading range around 55. Trades there for the last 5 or 6 months. It even seemed to find the low of the year, which is right around 46. And right now, she's at the 63 area. Now, let's pull this up. All right, click on that. Open up where it says View Trades. Left click on that. And as you see, we bought BMY, 1,000 shares, on the 23rd at 62.50. Then what we did is we turned around and sold the 63 call. Now, for those of you who don't know what that is, that's called a covered call. It's where you buy the stock and then you sell the call option, which is basically the right for someone to buy it from you for a strike price. This is called the strike price. Okay, so let's open that back up again. So you can see I bought the stock on the 23rd, 1,000 shares, 62.50. Okay, right now it's at 63.19. Okay, so that means I made $690 since it opened. Now what I did first thing this morning, see, 9:31. The market opens at 9:30, so I put the order in last night. If you saw last night's show, you'll see that I put the order in last night. So first morning it gets filled, and it got filled at 9:31. All right. Basically, I'm selling someone right to buy it from me at 63. So why would I do that? Stock is at 63.19. Sell it for 63.19. Why sell it at 63? Well, for selling it to someone at 63, they're paying me 76 cents per share for that privilege. So I'm not selling it for 63, I'm selling it for 63.76, which is more than what the stock is now. Okay, so I'm actually getting more for the stock. Now I paid only $62.50 for the stock. So I'm making an extra 50 cents on the sale price. See, $62.50, I'm selling it for 63. But for that privilege of buying it from me at 63, they're willing to pay me 76 cents a piece per share. That's another $760 because it's 10 contracts, and each contract is 100 shares. 100 shares is $76. 76 bucks times 10 is $760. So that's an extra $760 just to hold on to it until Friday. So when Friday comes, if the stock is above 63, whoever paid me that 76 cents to buy it from you will take possession of it first thing Saturday morning, because weekly options expire Saturday morning. And I will simultaneously get the extra 50 cents per share that I'm selling it for. Okay, so all that being said and done, I'm looking to make $500 on the sale at 63, and then another $760 for the option premium. So that's what, that $1,300. So I buy it for $62.50 and I sell it for 63. I make $1,300, somewhere around there, right, roughly that area. Okay, that's that position. The next position was CAH. Let's pull it up. CAH. That's Cardinal Health Incorporated. I'll go back to daily, 1 day for a year. Okay, that's where we are. Okay, CAH starts out the year at 77. Takes about a month for it to find the low of the year of 62. From the low of the year, she traded there, about 2 weeks or so. She climbs back up to a trading range of 71, trades there for a month, trades for 3 or 4 weeks at 72, 73, then back up to 75. Then she finds the high of the year a couple months later, 84. And then, oh my goodness, algae just kicked in from somewhere. And then somewhere in April, the middle of April, she goes from 81.66 and drops down to 72.57 overnight. The market maker woke up in the morning and said, hey, wait a second, something ain't right here. So here we are, back at 72. Okay? All right, so it trades there for a month and a half, and it slowly climbs up to the 80, drops back down for a profit taken for about a month, month and a half at 77, where she takes another nosedive from 77 to 70, which is a 10% decrease overnight. Okay, from there, she continually goes down to find support down here at 63, which is the support for the low over here. Okay, she bounces off the support, hits 70, comes back down, and she could be finding a new bottom right here at 66 for the new bottom, which we have this position here. We got the 66, 66 and a half call spread. Okay, now we're looking to get we talked about this last night when we did this trade. We're looking to get 30% off of this trade. And it very well could happen. As you can see, the seasonality for this. Here we are right here. Okay. Here's where we are. This is Monday. So we were here for Friday. Right here for Friday. We're looking for that up. A little bit of down there, but she's going to go sideways right in this area. So we're looking just to stay right where it is. And we got one more week to do this. I believe CAH is going to be going EX this Friday. So as long as she stays, where is it? Get back to where we were. Back to the standard chart. So as long as she stays above, where is it? Above the 66 and a half. Now 66 and a half is way down here. Now she's at 67.34. So basically, if the stock continues to go up, if this truly is the new bottom here at 66, if she continues to go up, we're going to make the 30%. Now, if she doesn't go anywhere, basically stays flat or just sideways, whatever you want to call not moving at all, we're going to make our 30%. Now, we're also, if the stock goes down, we're still going to make our 30%, but we have a break even at 66.30, I believe. So this thing can go down about $1, and we would still get out 30%. So as long as she stays above 66.50, we'll be good to go. Okay. That being said, let's move on and see what we're looking at for tomorrow. Now, tomorrow's the 26th, so we're going to look at 10 days after the 26th, which would be October 10th. Oracle. Gotta love Oracle. Okay, so Oracle's paying 19 cents. Let's put it in and let's see what the numbers look like. ORCL. Now, Oracle has a trading range of 38 for about 4 months. And then she shoots on up to a trading range of 44 for about 4 months. Then she gaps up from 46 to 50 and trading in this range here for the last couple of months. Now, from the high of the year of 53, she gaps down to 50, but settles in the 48 area. So she's at the 48 area now, and let's see what the seasonality looks like. But one thing I like about down gaps is they have on good companies, they have a tendency to fill. So basically, at some point in time, this stock's going to come back up to the 50 area. So let's see what the seasonality looks like for Oracle coming into the fourth quarter, because this is the last week of the third quarter. All right, so she's going to be flat, because this is what basically flat sideways. So let's see what they're offering for a flat trade. All right, let's open it up. Let's put Oracle in here, ORCL. All right, so we have 4 days left for this trade. Now, she ended up at 47.97, so that's going to be a tough one because it's so close to the 50 mark. We want to do the 47.50 because I don't want to go to the next strike up because there's only one way to make money, and that's upwards. Okay, so this is at 42. All right. The 47.50 is only offering 8 cents. So what do I mean by 8 cents? All right. It's a 50-cent move. All right. It's a 50-cent difference between the prices that I'm buying and the prices that I'm selling. All right. So I'm buying the 47 and I'm selling the 47.5. And I only want that 50 cents. I want the stock to stay where it is, or I want it to go up. It could even come down a little bit, but I basically want it to do, one of three things. And that's all it does. Going up, down, or sideways. So if we get into this position and the stock goes up, we make our money. If the stock goes sideways, it doesn't go anywhere, or sideways, whatever you want to call it, sideways, nowhere, it's still, we'll make our money off of it. Now, at 47.97, she still has a way to go down, and we'd still make money. But I don't want to pay 42 cents for it. I don't mind paying 40. So what I'm going to do is I'm going to put her in for 40 cents. Do my 50 contracts, and let's see how much that's going to make us. All right, it'll make us $500, which is 25% return for the week. Okay, so I'd actually be making right around 25%. Maybe a shy bit less. Okay, so let's send that off. Now remember, I'm going to make the 25% if the stock goes up. I'm going to make 25% if the stock goes sideways. I mean, if it doesn't move at all, if it stays right where it is Friday at 4 o'clock in the afternoon, and she stays right at 47.97, I still make my 25%. This stock can even go down as low as 47.40 is where my break even is. So if this thing goes down, it can go down as far as 47.40 before I start losing money. So at 47.39 is when I start losing. Okay, so I keep an eye on this all week long. Fridays we usually here at 3:30 just to check our positions to make sure we're not losing any money. So I'm going to send this one off. There we go. If it fills, it will fill first thing in the morning. Now I'm buying it at stock at a limit price of 40 cents. The closing price was 42 cents. So I'm not really optimistic it's going to go through or not. It might not. All right, so let's go back to the market watch. So the week of the 10th, for Tuesday, we have Oracle. Okay, so let's go to the prior week and see what we have available. Now we have one more option, or one more week to play these guys. Now these guys is the ones that we played last week. Now Comcast and Gap, let's see what they're offering this week. CMCSA. All right, that looks good. All right, I'm not going to give you I'm not going to give you a play-by-play for each one. I'm just going to go quickly and see which ones look good. I might as well just go to the seasonality and see what that says. Oh, Comcast, here we go. Comcast looks like she's going to be flat for the week. Now, this is based on historical performance. Now, historical performance, what that means is stocks react in a certain way throughout the year. Because Comcast, they're not coming up with new products. They're not coming up with, any, what's a good word for this? Any landmark new technology. They're selling old stuff. Okay, Comcast sells air, so to speak. Hollywood or New York or wherever produces movies, produces TV shows, produces the news, all that kind of crap, and all they do is they just repackage it and sell it. They're not really doing anything. Okay, but they are providing a service. Okay, so it's the same thing day after day after day, 7 days a week, Monday through Friday, 6 a.m. in the morning to 6 a.m. in the morning. All the same. I can't believe that someone's calling me while I'm online. All right, I got to call him back in 15 minutes. I don't even know who Tim is. But anyway, let's move forward and see what we're going there. So Comcast, let's see what they're offering for, CMCSA. So let's see what they're offering for this last week, because we can't play them 2 weeks. We can only play them 1 week. So Comcast is $37.91. So we're going to look at this one. 41 cents. Let's do 20 contracts at 40, because I want to make 25% is a nice return. So let's give that a try. Let's do 50 contracts. What is that costing me? Whoops, wait a second. At 40, confirm. Yep, there we go again. That's a 25% return. So if the stock stays where it is, goes up, stays the same, I make the 25% on Comcast. All right, who else did we say? Comcast and Gap. GPS. So let's go GPS. Okay, now the red line represents 10 years worth of data. Okay, 1 year on top of another, and then they average it out over the 10 years. So how did the stock react this time frame over the last 10 years? You get the dividend coming up in 10 days. How is this thing going to look? This thing's going to go down, and I'm going to say no. I'm going to pass on the gap, because the dividend is going to be the next week. This week here. So is that going to be? No. See, next week. See, here we are now. We're in the last week of September, which is the last week of the third quarter. So next week, looking at October, the first week. So the 6th of October, which would be right about here. Wait a minute, 6th of October is going to be right about there. So we could do it next week, but I'm not sure. We'll have to check. Wait a minute. I have it right here. Tuesday's the 3rd. Okay, so this is the last week we can do gap, because to get the EX date is going to be next Tuesday. All right, so if we wanted to collect the dividend, this is the time to do it. Jump in, hold on to it. But as you see, if you jump in now, based on what it did last year, the year before, the year before, the year before, this thing's going to have a tendency to go down this week. And it should climb next week. So you might be able to buy it Monday. See, look, yeah. You can buy it Monday, collect the dividend. All right. The EX date's the 3rd. The date of record is the 4th, which is Wednesday. Right? You buy it Monday. The EX date is Tuesday. Okay. Wednesday is the date of record. That is when you eligible. You're the person on record, or the person in the files who's eligible to receive the dividends. That'd be on Wednesday, and then first thing Thursday morning, which is October 5th. So what does historically this thing do? So this time of year it goes down a little bit, and then the 1st of October, right there, Monday, would be the 2nd, is the day to get it. Today, she has to move up. Wednesday, she goes a little bit higher. Thursday, sideways. And then Friday, you're out with a little bit of a dip. So maybe you want to sell it the next Monday. Who knows? But buy the stock before the EX date. Hold it through the date of record. And then sell it for profit afterward. That way you collect the dividend and you collect a little bit of profit afterwards. There's no guarantee that this is going to work. It all depends what the other software says that you find out our website. If you haven't gained access to our website yet, that the 10minutetrader.com, where in the members area you can access all the software. Anyway, let's see. Oh, we're going to pass on it this week. Okay, we're going to pass on this one. So let's see, Costco. Now, Costco. It looks like it should be Costco, doesn't it? CSCO, Costco. But no, it's Cisco. It could be Cisco too. Costco, Cisco, whatever. Anyway, Cisco Systems. Let's put that in and see what that looks like. CSCO. Okay, and here's Cisco Systems right here. Okay, that one looks pretty good. It looks like a sideways trade. So let's see if we can do one trade on Cisco. CSCO. That's at 33.72, so we look at the 33.50, which is this one right here. 40 cents gives us our 25%, as long as she stays above. Let's quickly look at the chart, see what the year chart looks like. Okay, that looks pretty good. The low is way down here, 29. The high, which seems to be resistance, you get 1, 2, 3 tops. Okay, and you have one bottom here, which is a low, but you have a double bottom here. 1, 2, and another double bottom over here. So could she realistically stay above the 33.50? Hell yeah, let's take a look. See, this is the trend. Look, a little bit sideways and upwards. So we're going to do 50 contracts here at the 40 cents, which is at the money, which most likely we should be filled first thing in the morning. Okay, there's our break even is 33.40. Maximum profit is 500, and it's costing us 2,076, which is 25%. And there we go. Now that's going to be enough for now, and this should be a relatively short night because we got 3 trades in tonight. Otherwise, we can look at these guys right here. We can look at all those, and then these guys right here. Those are some more. I wouldn't Marvel unless you're a Marvel fan, but other than that, let's check for our questions. No questions. Gotta love it. That being said, I'm signing out early. You guys get your tips. You guys got some progress. Well, let's see what we're going to look at for tomorrow. So you guys have a great day, and I'll see you tomorrow.